So my dear friends, from the last year 2020, after the COVID-19 crash, the market is only moving to one direction, and that is the market is moving to the upside. Now everyone is thinking that a correction will come, but the correction is still not coming. Why the correction is not coming? When the correction will come? How severe will be the correction? When exactly to invest on Nifty 50? So I'll analyze each and every points in this video with the fundamental analysis of Nifty 50. And for this, I'll use only one single indicator. I'll use one single fundamental indicator, that is Nifty's PE ratio. PE ratio means price to earning ratio. So guys, I'll show you when exactly the correction will come, when exactly to invest on the Nifty 50. So I'll take you to the topic directly, but before that, if you are not yet subscribed to me in YouTube, this is the time to subscribe to this channel first. So my dear friends, few days back I have made a live session on YouTube, and there I feel I have predicted that Nifty can touch 20,000 levels. And I feel when I have made the live session, Nifty was trading around 15,000 levels. I cannot exactly remember the level when I have actually made the live session, but around 15,000 level the Nifty was trading. Maybe some 300-400 points there will be a plus minus, but now the Nifty is trading almost at 17,500 levels. So after I have made the live session, I feel it is not yet 3 months, and in these 3-4 months the Nifty has moved up by 2000 points. Now where exactly the correction will come, whether at all the correction will come? So for that I'll show you how to analyze the Nifty 50 chart. But before that guys, if you want to see my prediction, where I have predicted that Nifty will touch 20,000 levels, I'll give you the link to that live session in this video description. So from there you can watch my previous live session and you can see how I have predicted the Nifty 50 previously. So now guys, here I have created a page on my website, and this name of the page is Nifty PE Ratio chart. So here, if you are on my website stockmaniacs.net, here you will see freebies. If you keep the mouse on the freebies, you will see free charts, and in the free charts you will see Nifty PE Ratio chart. So you need to come down to this page, and if you do not want to remember how to come down to this page, this process, if you do not want to remember, don't worry, I'll give you the link to this page in this video description. Now guys, PE ratio means price to earning. Now Nifty's earning means earning of all the companies. Now if the PE ratio is high, that means the price is higher compared to the earnings. So high PE ratio is not healthy for the market. So if the PE ratio is very high, the chances that the market will see a correction. And if the PE ratio is low, that means the price is lower as compared to the earning. So there are chances that the price will go up. Now how to predict where exactly the market is bottoming out, I'll show here. I have given you enough charts. You can bookmark this page, and time to time you can come down to this page and you can see the fundamental status of Nifty 50. You can do your own fundamental analysis of Nifty 50 in this page. Now guys, P ratio I have discussed, and here I have given the Nifty chart along with its P ratio chart. You can see the blue line is Nifty. You can see Nifty, this is from 2003, Nifty was moving up. It has corrected on 2008. Then once again it was moving up. It has corrected on 2020. then it is moving up. So this is Nifty's chart. Now guys, the red line is Nifty P ratio chart. So you can see on 2008 it has actually bottomed out. The P ratio has bottomed out. You can see Nifty has also bottomed out. You can see on 2020 the P ratio has bottomed out. Nifty has also bottomed out. And you can see now Nifty is moving up, but the P ratio is moving down. That means guys, there are chances that this rally can still continue. So do not expect a severe correction. Any small corrections you are getting on the market, that is buying opportunity. As the P ratio is not yet overheated, this rally can sustain. And do not short this market only because the market is moving. The fundamental analysis of Nifty 50 is showing that there are still much room on the upside. You can see Nifty's P ratio is coming down, but the Nifty is moving up. So that means the price is moving up and the earnings are also moving up. That's why the P ratio is not moving up. So there are chances that the market can move up a lot from here. Do not just short this market because it is just moving up. So this market is a buyer's market. Whenever you are seeing a correction, you need to buy on dips. Do not try to short sell this market till the P ratio is becoming overheated. Now guys, how to predict when the P ratio is overheated or when the P ratio is oversold? So for that, I have given you Nifty's P ratio chart with its standard deviations. So you can see this is Nifty PE chart with standard deviations. So here you can see the same P ratio chart, but here there are 5 extra lines. So the middle line, the black colored line is the SMA of P ratio. The blue line is P ratio, the black colored line is the simple moving average. This is 5 years simple moving average, and we have created 2 Bollinger Bands. One is Bollinger Band 1 and another one is Bollinger Band 2. So Bollinger Band 1 is 1 standard deviation away from the SMA of the P ratio, and Bollinger Band 2 is 2 standard deviation away from the SMA of the P ratio. So you can see whenever the Nifty's P ratio is coming close to the 2 standard deviation, it is overheated or it is overbought. So you can see you need to buy the market aggressively whenever the market is close to the 2 standard deviation bottom Bollinger Band, and you can start buying from 1 standard deviation also, because most of the time the market will move between the 1 standard deviation top Bollinger Band and bottom Bollinger Band. There are chances that the market will seldom comes to the bottom 2 standard deviation Bollinger Band, but whenever it comes, the chance that the market will bounce back furiously. It has tested the bottom Bollinger Band, bottom 2 standard deviation Bollinger Band on 2008. We have got a huge rally after that, and it has actually tested the bottom 2 SD Bollinger Band on 2020 also, and after that what has happened, that is history. So these are the chances. You will not get a chance to enter the market all the times. Most of the times you can enter near to the bottom 1 SD Bollinger Band, but if you are getting anytime, if you are getting the P ratio chart close to the 2 standard deviation bottom Bollinger Band, you need to buy the market aggressively. Whatever will happen, buy the market in truckloads. You can buy the market, you can buy index funds, you can buy blue chip stocks, and you will make lot of money after that. 2020 we have seen whoever has bought the market, they have made a lot of money. So guys, this is the power of the fundamental analysis of Nifty 50, and you can predict the next moves of Nifty 50 using the fundamental analysis. Now guys, next there is the Nifty price to book value and dividend yield chart, and then we have given the Nifty price to book value with its standard deviations. Once again, here we have given one standard deviation Bollinger Band and we have given two standard deviation Bollinger Band on the Nifty price to book value chart. Once again, whenever Nifty price to book value hits the bottom two standard deviation Bollinger Band, the market has bounced back furiously historically. On 2008, you have seen the price to book value has tested the bottom two standard deviation Bollinger Band. After that, what has happened, that is history. On 2020, once again, the price to book value chart has tested the bottom two standard deviation Bollinger Band. After that, what has happened, that is history. Now the price to book value is hovering around the top two standard deviation Bollinger Band. So now it is thought prudent to invest more. For the first time, if you are holding longs, you can hold them, but do not invest new quantities till the price to book value is a bit oversold. So do not short sell this market. Whatever we have understood after this fundamental analysis of Nifty 50, do not short sell this market. Do not short sell just because the market is moving up, because price to earning ratio is still not overheated. Rather, the market is moving up and the price to earning ratio is moving down. That means the price is moving up, the earning is also moving up. So the PE ratio is not increasing. So do not short sell this market. Try to buy this market whenever you are getting dips. Whenever you are getting dips on the P ratio, whenever you are getting dips, particularly on the price to book value ratio, you need to wait for a dip in the price to book value ratio. You can buy on dips of the RSI, but whatever happens, buy this market. Do not try to short sell this market. Do not try to short sell this market just because it is moving up. So guys, this topic of the fundamental analysis of Nifty 50 using the Nifty PE ratio chart is over. I have completed this topic. If you have liked today's video, just give me a thumbs up and do not forget to share this video with your friends and relatives. And guys, if you are not yet subscribed to me on YouTube, do not forget to hit the subscribe button and also do not forget to hit the bell icon, because if you are subscribed to my alerts, you will get my next video updates instantly. And guys, I'll come up with a new video very soon. If you have any queries regarding this fundamental analysis of Nifty 50, do not forget to shoot me a comment in the video comments. I'll try to answer your comments very fast. And guys, till I come up with a next video, you need to wait for me. Till then, bye bye.